Well, you guys aren't going to believe this, but we just had a stock that went up 329% today, and it squeezed out shorts. We had an epic move. I mean, this was really incredible and totally unexpected. Yesterday, it was kind of slow. Monday was kind of slow. No surprise, this is a holiday week. Today, the market closed at 1 p.m., an early close. Tomorrow, it's closed for the 4th of July. Now, I'll be back at it on Friday morning, live streaming for our Warrior Pro members, as always. But my expectations for this week, a holiday week in the middle of the summer, it's going to be slow. Out of nowhere, we get a stock that squeezes up 329%. How does it happen? What's the catalyst? What's the trigger? Well, this is very interesting. The catalyst seemingly was a post on Reddit that presented a compelling argument, a very well-written, well-prepared thesis on why maybe, just maybe, if this one stock makes a big move, that could ignite the basket of meme stocks, which of course GameStop is part of, and then send GameStop into the mother of all squeezes. Now, I don't know about all of this, whether or not that's going to happen, but we got a 329% squeeze today. I traded it sitting right now with one of my best days of the year, certainly the best day of the month of July. Of course, that wasn't hard to do, but sitting in really nice shape. So let's go ahead and jump into where things stand here. The stock is KOSS, KOSS. Many of you are familiar with this because this is the stock that, well, for the last 3 years has been trading sort of side by side with GameStop. Now, let me bring you back to 2021. We're going to time travel here for a moment. I'm going to show you the chart here of these two. And by the way, we have we've got the Reddit thread here, which I'm going to go through for you in a second as well. But if we go back, in fact, even if we just look at the last 30 days or so, the last 6 weeks, you can see that they trade so similarly. All right, so GameStop starts popping up, KOSS starts popping up. GameStop pulls back, KOSS pulls back. Then we get the big news that all of a sudden, out of nowhere, we've got Roaring Kitty, aka Deep Effing Value, posting on Twitter, and both GameStop and KOSS make this big squeeze up. Now, GameStop pulled back quite a lot off those highs. In fact, we could actually measure the depth of that pullback. It was substantial. Well, we know that it actually went up to $80 in after hours trading, but even if we just go from regular hours down to this low down about here, that's like a 75% pullback off the high. That is significant. Well, KOSS didn't pull back all that much off the high comparatively. It pulled back to the low about 30%. So why did GameStop pull back more? Because GameStop sold 45 million shares on the open market. They did an offering. And we know that GameStop has been a big target for these short hedge funds, which are just beating the stock up. I mean, that's the whole reason we got the big short squeeze in the first place back in 2021. So now let's go ahead and look at 2021. All right, so we're going to back this up here. We're going to go all the way back here. There's 2021, and we're going to do the same thing on KOSS, and you're going to see an incredible chart. In fact, there are a lot of people, I would argue, who made more money trading KOSS in 2021 than they did on GameStop, and I'll explain why. So these aren't perfectly aligned, but you get the idea. So GameStop in 2021 makes this epic move. It goes all the way up to, well, it was $500 a share, right? When you adjust it for the reverse split. KOSS, let's look at this for a second. KOSS goes all the way up here. Regular trading hours high was 130. And this thing started down here at like $4 a share. So why did KOSS squeeze up so much in 2021? Well, if you recall, in 2021, after we discovered that GameStop had short interest in excess of 100%, traders naturally started looking at the list of the stocks with the highest levels of short interest. So the stock with the second highest, the third highest, the fourth highest, the fifth highest. And you know who was on that list? KOSS. KOSS was on that list with an unthinkable level of short interest, especially considering the stock was so cheap. Now, KOSS as a company has been around for a long time. This is not a new company. In fact, they were founded in 1953. They're from Milwaukee, Wisconsin. So, it's a corporation that makes headphones. All right. Now, this is their website right here. I opened it already in this tab. So everyone should buy a pair. If you had a good day trading KOSS, do yourself a favor and buy a pair. I mean, if I'm going to be honest, they're a little funny looking. They don't look the most comfortable. Listen, I'm not here to judge the headphones. I'm looking at the technical analysis of the chart. But maybe that's why the hedge funds were shorting it so heavily back in 2021. They're like, these hedge funds aren't even comfortable. So they're shorting the heck out of it. It's all the way down at like $2 a share. And then all of a sudden, retail traders find out, wait a second, if this thing has 90% short interest and its average daily volume is only 100,000 shares, but there's 4 million shares available to trade. Let's think about that for a second. Let's do the math. So you have a 4 million share float, 4 million shares, that's the float. That's the number of shares available to trade. You've got 90% short interest. So let's just say 3.6 million shares are short the stock, but it only trades average daily volume. Average volume was 100,000 shares. So based on the average daily volume, it would take you how many days to cover 3.6 million shares? Take 36 days, right? It would take a long time to cover all of those shares. And what happens when the stock squeezes up real quick? Well, this whole chunk of shares, they're getting buried. All right. So that's exactly what happened. And once the squeeze began, I mean, it was all over for the people that were short costs. This thing just took off and it didn't look back, and retail traders jumped on it aggressively. I traded it. So did probably every other retail trader in 2021. This was a big stock. So of course there were other meme stocks at that time. There was Bed Bath & Beyond, and we had AMC, and there were a whole handful of them, which create what are kind of the so-called basket of meme stocks, the basket of meme stocks here. And within this basket, you've got GME, GameStop. So many markers are going low. GameStop, you have AMC, you have BBBY. Let's see, there we go. And then we've got costs, which is kind of a funny one in this basket because it's the only one that's not really kind of it just doesn't really fit within the big kind of like brick and mortar businesses that are from a previous age with an old fashioned business model, but it just fell into here because of the high short interest. All right. So for that reason, they've become kind of, they've become very closely connected. And I think that what this exposes in a way is the degree of algorithmic trading which drives the market. And some people would say that this algorithmic trading is manipulative, that when one stock goes up, it pulls another stock up, or when one stock goes down, it pulls another down. I can't really say exactly how these work because I'm not on that side of the fence, so to speak, right? I'm a retail trader, so I don't know how these institutional traders have set up these algorithms to the point where when GameStop goes up, cost follows. But let's jump into this Reddit thread to help you kind of get context about what some of the folks over on Reddit are thinking. So this one user says, this post contains an in-depth look at a stock that is not GME GameStop. Some of you may not be ready for this DD, due diligence, but this DD is ready for you. Please, folks, lower your pitchforks, read thoroughly, and let it all sink in. Very well written. This is a great intro. It's fantastic. This is how you get someone really captured and sucked in. I'm already invested in this. So he says he's posted new theories. His posts were downvoted to oblivion, but both times I ended up being right. So, please take this with some consideration. All right. So he says, although not required, a high quality tinfoil hat is recommended beyond this point. Okay. We're going in deep to the rabbit hole. I'm ready. Now, he begins by talking about the strong connection between GameStop and costs and why costs is different from the other basket stocks that are meme stocks, such as AMC and Bed Bath & Beyond. So the GameStop cost connection, he goes on to show a number of charts that compare how similarly they trade, right? Selling off, popping up, selling off a little bit. This looks like a Hakanashi candle, but nonetheless, moving back up, back down, sideways, right? Just very similar patterns. And it's true that the two trade in tandem. In fact, I would say that some people trade costs as a proxy for GameStop. Because GameStop is more expensive, they see GameStop going up. And I was thinking the same thing just back like a week ago when we had this move, or 2 weeks ago, whatever it was, or even just in the last couple of months, so 6 weeks, doesn't matter. You get the idea. because I was thinking, all right, GameStop is going up, but I can buy costs at only, $5 a share. So I could buy 10,000 shares of costs. And if cost goes up $1 a share, I'm going to make 10 grand. Now, $10,000 of profit on a $40,000 investment, that's a nice return. If I do a $40,000 investment on GameStop, I'm going to buy 1,000 shares at $40 a share. I'm not going to, it's to make the same amount of money, it's going to have to go up a lot more, right? So in terms of dollars per share, and it's just the nature of when a stock is higher priced, 10% on GameStop, 10% on costs. 10% is 10%, but realistically, it's a lot easier for a stock of this price range to go 10%. From $4 to $4.40, boom, you're up 40 cents, you're up 10%. It's done. It goes up $1 a share, you're up 20%, 25%. So I did trade costs a little bit, or at least I was looking at it. Now I can't recall if I did trade it. But the problem was, although we had high volume on these days, GameStop was just the more obvious play. It was more thickly traded. It was the leader, and cost was sort of following behind. I think I did take a couple trades on it, and I was thinking cost would move more than it did, and it kind of didn't. So what's interesting is you had this big sell-off on GameStop here, but of course we know that GameStop did the secondary offering. No secondary offering with costs. So it pulls back, but not all that much. Comes back up here once Roaring Kitty comes out with his post that he was in 5 million shares of GameStop, right? GameStop goes up, but then both of them kind of come back down. So they're sort of trading in tandem here together. In other words, if you were wanting to short GameStop, some people might say maybe it's easier just to short costs and be a little under the radar, because costs, maybe people won't notice it as much as they would if you're shorting GameStop directly, because it's kind of a proxy, right? Because they trade so closely together. All right, so this post on Reddit goes on to draw the comparisons pretty closely. And it comments on, well, here cost had a news filing and it made a big move. So there are some times where they diverge from each other, which is true. There have been some times where we get a divergence there, but more or less they look very similar. In fact, if corporate needed you to find the differences between GameStop and costs, most reasonably well-educated apes would come to the same conclusion that these are the same picture. This is impossible to differentiate. But what makes costs unique? This user asks. And he goes on to say, cost is a much smaller company than most of the basket stocks. In fact, it only has 9.25 million shares outstanding, which is true. 9.25 times $4.45, that's a $40 million market cap approximately. And 45% is owned by insiders, meaning the free float is only about 5.2 million shares. I actually have it a little bit lower than that at 4.8. So the float is very low. That's the available shares to trade. Cost has no options chain, unlike GameStop and some of the others. And so other than these crazy runs that cost has in tandem with GameStop, cost is generally illiquid. It's harder to get in, it's harder to get out. You do have some big days, but it's harder to get in and out. He notes that the borrowing fee on costs spiked up substantially here. And this was the cost to borrow that occurred right after Roaring Kitty came back on Twitter, right? So immediately that cost goes up. And he also notes that the failures to deliver were 220,000 shares on costs. Failures to deliver can indicate naked short selling, as we've learned from some of the other episodes that I've taught on naked short selling. So 220,000 shares is not an insignificant number of shares relative to the float, right? That's 5% of the float is failure to deliver. That could be a significant, that's significant if that's all naked short selling. He puts it into perspective, that would be like GameStop with 16 million failure to delivers in a single day. So he continues to go on that when cost runs, there's no options chain for short hedge funds, which I think is what he's referring to here, to manipulate, to try to push the price back down and create these walls. All right. So interesting note there. It's true. There is no options chain on costs. And so he summarizes down below that deep effing value is going to show us the path to the mother of all short squeezes. Okay, we know that. Suspecting he already maybe took profits on Chewy, and then he's going to flex that massive portfolio by buying up Costs' float, buying the entire thing. I think that's optimistic, not impossible, but optimistic. And then putting the rest into GameStop. And that this will be the spark that ignites the whole basket. So this is where I, frankly diverge. I don't really share a lot of these opinions, but I don't see that prediction coming true myself. What I see here is a compelling post about the relationship between GameStop and costs that was posted on a Reddit thread with 1.1 million members, and that's getting a lot of engagement. So what I see is basically after hours yesterday, this thread was posted and began to trend. It began to get some engagement, and costs began to move higher in after hours trading. And some would say, was it the algorithm? And they question here, what's making this thing move higher? Is it the algos? Is it degenerate apes? Is it deep effing value? Who is buying this stock? Well, to be honest, it probably was retail traders who saw the post and thought, that's fairly compelling. And, we have the whole spectrum of traders participating in this market. We have traders who are complete degenerate gamblers. And then we have traders who are extremely calm, cool, collected, have a strategy, have incredible discipline. And then you've got everyone in the middle. So naturally, there's going to be some traders who saw this post, like they see a lot of posts, and think, I'll buy some shares. Let's see what happens. So it ends up going up about 30% after hours, but granted, on very light volume. These candles have, less than 5,000 shares each, except for the tall ones that had about 12,000 shares. Now, it's true that in the last few weeks, we have seen some volume on some small cap stocks in the after hours trading sessions. So perhaps because trading was slow yesterday, some people saw this starting to hit scanners and maybe jumped in a little bit here or there. Maybe some short sellers jumped in. But even at 4 a.m. here, when European traders are waking up, it was selling off. So it was kind of a non-event until the open, when suddenly it spikes up to 620. So at that point, I'm like, all right, let's start getting dialed in here. So it pops up to 620, it pulls back down. It pops back up to 640, it drops down. I was watching it through this area, and, I kind of thought, well, costs at this point, I don't really know if I trust it. I mean, it's a meme stock at this point. What's the catalyst? Okay, it's a meme stock. It's trending on social media. Is that enough? I don't know. Now, what's one of the big differences, no doubt, between GameStop and costs. So GME current float is approximately 400 million shares. All right, costs current float approximately 4.8 million shares. So it's 1% of the float. 1%. Now, let's just say for the sake of argument that you've got, either way, you have 1 million Reddit users in that group that are interested. Let's say they're all interested in GameStop. And let's say all of them buy a little bit of GameStop. Well, 1 million users, but you've got the 400 million share float. Now over here, you got 1 million users and you've got a 4.8 million share float. So what are you seeing? This right here is creating a much greater imbalance between supply and demand than we could ever realistically see with GameStop. And, in all fairness, if Roaring Kitty made a compelling argument for why costs was worth trading, it would probably have gone to $100 a share because of the incredible imbalance that would have occurred between supply and demand. Someone makes a post on Reddit who, I don't know who it is. I don't know, what kind of following they have prior to this post, but, they kind of come out of the woodwork, make a compelling argument. It was well researched and well thought out. Perhaps it's a little bit optimistic in the prediction, but hey, that's their freedom to make that choice and have that opinion. There's nothing wrong with that. That's totally fine. And other people said, you know what? I agree. And as the stock squeezes up here, it's up 30%, 40%. Now what's happening is it's hitting stock scanners. So now all of a sudden my stock scanners are firing off costs. Bing, 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 bing. And I'm like, what's going on with costs? And now you've got all of the active traders in the market who may or may not care too much about meme stocks like GameStop and AMC, but on days when they're spiking and hitting scanners, we pay attention because our job is to be hunters of volatility and managers of risk. And cost presented today, volatility. So as it starts spiking up here, I'm getting interested. Now, initially, it does this sort of pop here, and I kind of thought we were doing the beginning of a head and shoulders pattern with someone that has like kind of the crushed head of a degenerate meme trader. It's sort of like a very small head. All right, so I can relate at times. So it dips back down, it comes back up, and then right here it goes from 650. And I was watching the high of this candle, and I thought, not sure. It breaks 650, goes up to 675, goes up to 688, and it hits a high of 7. It pulls back right here, and on this pullback, this is where I took my first position. Okay, so let's start to get dialed in on the 10-second chart, and I'll show you the trades that I took. So I bought my best entry, my lowest entry was at $6.82. So that would have been right about here. It comes up here, it pops up, and I got in on this candle right here. I got in thinking we were going to break right through 7. We end up dipping back down. Now, by the way, right here at that moment, we look at the 1-minute chart. Let's check our indicators. Okay, so MACD, positive. Volume, any big, huge red volume bars? No, we're looking pretty good. This was right here. So we're looking pretty good. No issue with that. Float, it checks out. By the way, those of you guys that didn't have a chance already to download my stock selection PDF, which lists the 5 criteria that I have for being willing to take a trade. I'll put a link to that in the description. All right, so you guys can check that out. All right, so this checks out from all those perspectives. It meets my criteria. The catalyst, it's a meme stock, but it's obviously moving. So the fact that it's up now at this point, nearly 100%, it's worth considering. And so now I'm watching the level 2 and I'm watching on the 10-second chart, looking for an entry. So like I said, I took my starter right here. I then it dips down. I added right here. My stop on this was the low of this pullback, about 655. It ends up popping right here up to a high of 728, 725. And I was like, whoa, okay, that was kind of a big pop. It then dips back down below 7, and I was a little worried because I was like, I don't usually love to see a topping tail like that because topping tails like that communicate indecision. The fact that the price squeezed up is great, but the sellers brought it back down and it ends up closing like this. That's bearish. All right, so that's a bearish candle. We don't like seeing that. But even in spite of that, it was able to push higher. And what I kind of started thinking was, I think I'm getting in this right here, and there's going to be a wave of, retail Reddit traders that are going to keep buying this up. So let me see if I can position myself to just hold and ride this wave for a little bit. It ends up pushing up to 725, 730. I was like, guys, I don't think that this is going to be the mother of all short squeezes, but I think we got something here to work with. Speaking of short interest. So I went and checked the short interest on cost today, and it's not particularly high. All right, so short interest, according to Fintel here, showing 400,000 shares, which is about 10% of the float that I have, just under 10%. So, that's not nothing though, especially it's really, 400,000 shares short is not nothing, but that's what's being reported. Now, if we look at GME here, GameStop currently is about 14%. So you could see GameStop is a little bit higher, but again, it's all relative. And one thing that we don't know is the extent of naked short selling and potentially other things like equity swaps that could affect the true short interest. So then cost is consolidating here under 750. So I've got my first entry, 682. Then we squeeze up. I ended up adding at 746 for the break of 750. It ends up punching higher here and then dumping. All right, so I actually averaged down on this from where I added up here. I added to the position off of 725, 730, and it squeezes here up to 780. And I was like, okay, now what I also know is dips are getting bought up. It dips again, and I'm like, okay, I want to be watching these dips for the pop back up. And we kept seeing it popping back up. So dips were getting bought up. It pops back up. It's halted up. It opens immediately on resumption. I'm adding to my position, dip and rip. It hardly dipped at all. It basically opened and ripped. It goes up to 830. It pulls back. Then it punches up to 880. It pulls back, goes, let's see. So then it ends up dipping down here to 8. And then watch this. So it ends up coming back up here in just a second. It comes back up here to about 868. And what we now have is an area where we've got this high of 887 and we've got this level right here of 868. So these are the levels that I'm watching, and I'm checking the daily chart and I'm thinking realistically, I mean, we're above the 200 moving average. We're above the high from back here. Going to the left and up, we've got this area here around 1246 or 11. We've got this one up at 1286, but the volume today is so much higher than any of these days back here that I feel like that's what's more important. We've got high volume. So this is time to just stay focused and keep trading the dips. So I end up drawing an ascending support line. And I think I drew it on the 1 minute here, but I'll just draw it again. So I ended up drawing an ascending support line that connected right about here and here. So I connected it right there. And I looked back and I was like, that kind of fits in here more or less. So sort of dip, dip, dip. It goes up right here. I take this trade getting in for the break of 850. We break 868. We punch up to 9, up to almost 950. And then we drop back down. Little false breakout here. We dip down. Where do we bounce? Ascending support. Now, by the way, if you want to get good at drawing those ascending support trend lines, if you want to get good at understanding technical analysis, there's no better time to start the classes than during our 4th of July sale. So you come over to Warrior Trading, join now, you can see 4th of July sale going on. You've got Day Trade Dash, which is the software only that I'm using, which you could see right here. And then of course you have my educational programs, the Warrior Starter, Warrior Pro, and then the Warrior Pro Special. So you can check those out. All right, so it ends up dipping down, breaking below, can't get back above, and we're below this level for a little bit. So then through this area, it is kind of incredible because all of a sudden right here, it pops back up to 9 and it dips back down. And I'm thinking, we're not far away from the highs. I mean, this thing is holding up pretty well right now. It goes sideways, and next thing you know, it's punching to a new high here through 925. It goes up to 10. It pulls back. It squeezes up to 11. It halts going up right up here. Now we are going parabolic. This is amazing. And this is when the squeeze really kind of got underway. So we actually go from $8 up to over 16. This is 100% in 10 minutes. I mean, we had a halt, so it was a little longer. But on each of the halts, dip and then a rip higher. Dip and then a rip higher. We halted up. My best exit of the day was at $17.94. $17.94. High a day was $18.73, so I didn't get the high a day, but I did pretty well on it. We got topping tail, shooting star candle, sells off, took a dip off of this level right here at about $12.85. We do get a bounce back up, but it doesn't hold. We end up going lower. And then at that point, I said, I think it's MACD's crossing over, so now I'm taking a little too much risk to keep trading it in this area. I think it's time to be done. So at 1 p.m., the market closed. We now are in after hours trading, technically, and it's continuing to hold up 173%. I'm locking up $8,119.21 on cost. This was a really solid move. And, look, you guys are all adults. You have to manage your risk. Trading these types of stocks, definitely, they're volatile. Volatility is what we look for, but we have to manage risk. Now, my thought on on cost is that this was a very clear peak right here. And it's hard sometimes for these to reclaim those levels. Given the fact that this doesn't have a very strong catalyst other than meme retail traders jumping into it, I'm not sure it's realistic to expect a lot more. It's worth noting that the company does not appear to have an active shelf registration. They didn't do a reverse split. I'm not sure that they even did an offering. Ryan Cohen does the offerings. He sold shares when GameStop popped up. Is Cost going to sell shares? I don't know. they might take a cue from him and say, let's do it. Maybe they won't. But right now, I mean, it's definitely compelling how high it went today. And, if we got a little bit more volume, we could see more action on this in the coming days. It just depends whether or not traders are going to jump in for the next leg up. So I will definitely be watching this on Friday morning. I will be live streaming for Warrior Pro members, of course, on Friday. It's the day after the holiday, so I'm not necessarily expecting a lot, but I wasn't expecting a lot today either. And we ended up getting a wild card out of nowhere, unexpected, but super grateful for it. And you can see today I did trade a couple other stocks. We had CNSP, SYT, and then IVP. Those ended up canceling each other out due to a kind of nasty flush that I got caught in on IVP. But, that's the way it goes sometimes. This thing squeezed from $1.50 up to $3. CNSP, this one had a big move as well, but came out with news of an offering. Registered direct offering, boom, price drop. So a little choppy out there today. Cost was the one that saved the day. So thank you guys as always for tuning in. I hope you hit that thumbs up. And I'll remind you as always that, hey, trading is risky. My results aren't typical. So manage your risk, take it slow. And I'll see you back here bright and early Friday morning. And actually, I have an upload that I'm going to send. I'm going to, publish, and it's going to go live tomorrow. So stay tuned for that. I hope you have a great holiday, and I'll see you on Friday.